Imagine turning a modest $16,000 into a staggering $889,901. Sounds like a dream, right? Welcome to the alluring world of investment, where dreams can morph into reality for the price of risk. Today, we're delving into the Direxion Daily Semiconductor Bull 3X ETF, SOXL. The backtest data is nothing short of impressive, a testament to the potential this world holds. Intrigued? Hold on to that curiosity. Now let's delve into the numbers that make SOXL an interesting possibility in the investing world. Imagine starting with an initial balance of $16,000. The magic of compound interest and growth kicks in, and if we fast forward, your final balance stands at a whopping $889,901 over the past 12 years tested. That's a compound annual growth rate, or KGR, of 35.69%. The ride, however, is not always smooth. The standard deviation, a measure of the volatility or risk, stands at a significant 74.46%. The best year saw an astronomical growth of 231.85%, while the worst year saw a dip of 85.66%. The maximum drawdown, the largest peak-to-trough decline during a specific period, stands at a nerve-wracking 86.91%. Now, let's talk about the risk-adjusted performance, measured by the Sharpe ratio and the Sortino ratio. The Sharpe ratio, which adjusts the returns for the risk taken, stands at 0.78. The Sortino ratio, which considers only the downside risk, is at 1.32. And finally, the market correlation, a measure of how closely this investment follows the market, is 0.81. This means it moves generally in line with the market, but has the potential to outperform when the chips are down. Impressive, isn't it? But what do all these numbers mean? Stay tuned. Numbers can be confusing, but not when you understand what they represent. Let's dive into the sea of digits we've just uncovered and make sense of them. First off, the initial balance is the amount of money you start with. In our case, it was $16,000. The final balance is what you end up with after the investment period. Here, it's a whopping $889,901. The compound annual growth rate, or CAGR, is the mean annual growth rate of an investment over a specified period of time, longer than 1 year. Ours is at 35.69%, which is quite impressive. Standard deviation is a measure of volatility. It shows how much the returns can deviate from the mean return. The higher the standard deviation, the higher the volatility, and the higher the risk. Our standard deviation is 74.46%, which is quite high, indicating a high-risk, high-reward scenario. The best year and worst year represent the highest and lowest annual returns respectively. The max drawdown is the maximum loss from the peak to the trough of a portfolio before a new peak is attained. Ours is at minus 86.91%, which is significant. The Sharpe ratio measures the performance of an investment compared to a risk-free asset, after adjusting for its risk. It is the average return earned in excess of the risk-free rate per unit of volatility. Our Sharpe ratio is 0.78, which is decent. The Sortino ratio modifies the Sharpe ratio by differentiating harmful volatility from total overall volatility by using the asset's standard deviation of negative portfolio returns, downside deviation instead of the total standard deviation of portfolio returns. Our Sortino ratio is 1.32, which is quite good. Finally, market correlation measures how closely the portfolio's performance matches the overall market's performance. A correlation of 1 means the portfolio and market move together. These numbers are not just figures, they are a testament to the potential of smart investing. Now let's add another twist to our investment strategy. Dollar cost averaging. This method is like putting your investments on autopilot. You simply decide on a fixed amount to invest regularly, regardless of the market price. The beauty of this strategy lies in its simplicity. When prices are high, you buy fewer shares, but when prices are low, you buy more. Over time, this can lead to purchasing more shares at a lower average cost. Let's look at some backtest stats. When applying dollar cost averaging to the Direxion Daily Semiconductor Bull 3X ETF, SOXL, the initial balance of $10,000 ballooned to nearly $9 million. That's a compound annual growth rate of 67.49%. The best part? Even the worst year saw a maximum drawdown of just under 87%. See how a simple strategy can make a huge difference? So, are you ready to take the plunge into the exciting world of investment? We've delved into the alluring world of investment and unveiled some magic numbers. We've deciphered those numbers and shown you the power of dollar cost averaging. The Direxion Daily Semiconductor Bull 3X ETF shows a promising compound annual growth rate of 35.69% and a final balance that could have you seeing dollar signs. But it's not all roses. The expense ratio is 0.94% and the standard deviation and max drawdown that remind us of the potential for volatility and substantial losses. And yet, the potential rewards of strategic investing are undeniable. Dollar cost averaging this ETF has shown an even more impressive time-weighted return of 35.69%. The numbers speak for themselves. But remember, every investment comes with its risks, so do your research and invest wisely. And if you found this video helpful, don't forget to subscribe to the channel for more insightful content. Happy hunting!